Circling back to our top story, easing trade tensions between the world's two biggest economies, giving relief to investors with stocks spiking higher overnight on Wall Street.
President Trump says he will likely speak with his Chinese counterpart Xi Jinping in the coming days. The breakthrough follows direct weekend talks between both sides in Geneva, resulting in both slashing tit-for-tat duties for 90 days by 115 percentage points. U.S. tariffs on Chinese goods will now be 30% from tomorrow, while Chinese duties on U.S. imports will be 10%.
President Trump has hailed the outcome, a total reset in relations. China also hailed the deal, which is saying it would inject more certainty and stability into the global economy. All right, for more on the trade talks between the U.S. and China, let's speak now with Deborah Elms, head of trade policy at the Hinrich Foundation. Deborah, thank you very much for joining us. So we understand that both the U.S. and China are presenting this as a win on their own terms. But is it fair to say both sides got what they needed, or is one clearly walking away with more leverage than the other?
I think it's in some ways it's too early to tell. This is a pause, remember. This is not the end of this discussion. This is a pause for 90 days on cripplingly high tariff rates in both directions, first imposed by the United States and then retaliated against by the Chinese. So what we've done is we've gone back not all the way to where we were in January, but closer to where we were on Liberation Day on April 2nd. So I think it's still too early to say who actually received the better hand out of this, because at the moment, we don't know what the final terms will look like.
Deborah, I'm not sure if you agree, but some say China was the one that blinked because of worsening economic data that was coming in, factory and jobs, for example, alongside current challenges faced by its economy. And we know consumption has been weak. Its real estate market has been in trouble for some time.
Yes, but you could make almost the same arguments about the United States, honestly, which is that the damage to the U.S. economy, even in the last 6 weeks of this period since Liberation Day, has resulted in the crashing level of ships arriving on U.S. soil, canceled orders, rising bankruptcies, incredible distress, actually, among a lot of the smaller businesses. Economic pain for U.S. consumers, because all of these tariffs are ultimately passed along to U.S. consumers and their buying has shrunk. So I think it's hard to me to declare a winner at this point. I think we have two losers. And the question is who lost the least? And that's not really where you want to be, I would suggest, if you were, waking up this morning as the leader of either country.
Understood. Deborah, markets clearly like the deal. The S&P 500 up over 3%. Businesses, no doubt, relieved as well. But it feels like it doesn't remove any of the uncertainty. I mean, we know it takes, 2 to 3 weeks for a container to get, from China to the West Coast. So companies probably have a bit of time to make a few orders. But I'm guessing 3 months isn't enough, for bosses to make hiring and investment decisions?
Definitely no on the hiring investment. Some purchasing for sure. There will be a lot more purchases, I would suggest, of things like Halloween decorations, Christmas ordering now in order to try to get it onto the U.S. before this 90-day pause expires. But the challenge is not just that it's 30 days for goods that are on the water. It's that we don't have ships currently on the water in the numbers that we had back in January. And so just restarting those trade routes and getting the containers to where they need to be, getting the drivers ready to pick up and deliver those containers, that's going to take some time as well. So we don't actually have a full 90 days as if we were sort of starting from at normal. We have some period of warm up and then presumably, possibly another hard shut off in 90 days. We don't know. And so firms are going to be very reluctant to order too much inventory, because what if, for example, tariffs actually go down in 90 days? What if they go up in 90 days? So I think that uncertainty that has been paralyzing business operations is reduced, but it's not eliminated.
Could this apply for consumers as well for both sides? I mean, does this reprieve translate into any sort of a cost relief, especially in the U.S.?
Well, certainly, so it depends on your benchmark. So if we're saying compared to 145%, then the current levels of 30 look relatively great. But that's still high. Let me just be clear. That's a very high number of tariffs. And so that's essentially, imagine if GST popped up 30% overnight here in Singapore, what the consequences would be for consumers. They would say, well, that's all fine and good. I'm glad it's not 145% GST increase, but we now have 30%, and 30% is still painful. So yes, I think consumers will be reining in some of their spending. They will be thinking twice about many of their discretionary purchases. They may order some products early. So I suspect that if you start pushing Christmas goods in early, some consumers who are paying attention will say, well, I'm going to buy those now because I don't know what the situation might be in December. I don't know what my situation will be like in December. And so, I think it's very unsettled. You can't have this kind of trade disruption so quickly and think that it somehow resets back to normal fast.
Right. Nonetheless, Deborah, many people are calling it a deal, but let's be clear here. None of Trump's unhappiness points, the trade imbalance, we're talking about other dissatisfaction points like a lack of IP protection, forced technology transfers and subsidies. None of these have been addressed. How hopeful are you that they can be in the next 3 months at all?
I think the U.S. has to be a little more clear about what they're looking for. And I think this has been a frustration from not just China, but a lot of U.S. trading partners are asking repeated questions. What do you want from us? Do you want us to invest? Do you want us to not trade more? Do you want us to focus on enforcement? Like, what are the things that you're looking for? And that's particularly true vis-a-vis China. And so what is supposed to happen now is that we have this 90-day window in which to negotiate over a larger deal that would include more topics. It could include all of those items that were in the so-called phase one deal from Trump's first administration, including stuff that you've mentioned, IP, enforcement, protection, a whole range of issues that the United States had at the time. But even that might have to be updated, right? That was a list that was created in 2016, 2017, 2018. If you say, well, are we in the same spot in 2025 that we were in then? My guess is no. So what's still valid, what's still important, what's new on the agenda, and trying to get the two sides together to have that dialogue. I don't think we will be done in 90 days, to be clear, with that larger agreement either. But you might be able to make enough progress to be able to do something again about the tariffs. Hopefully they go down. But let me just say, before everybody gets all celebratory, they could just as well go back up again. There's no guarantee that these tariff rates that we currently have are going to stick. They could go down, let's hope, but they could also go back up again.
So what are the sticking points that could blow this deal off, do you think? I mean, of course, looking ahead, we know the officials going to plan to meet in a matter of weeks.
It could be to stop the deal from going forward. Could be almost anything. It could be, a lack of respect or a perceived lack of respect, one way or the other. It could be actual actions on the ground. It could be evidence of a fentanyl shipment or transshipment of some particular goods out of China into a third market. It could be a perceived lack of zeal and enforcement at the border. I mean, there's a million things that could derail these kinds of high stakes negotiations. On the other hand, the fact that they were able to come to a pause after a weekend's worth of talks suggests that there is a commitment on both sides to lower the tensions. And I think that is to be welcomed. And we can, of course, all be thankful that that happened. I mean, I will say I was surprised by the level of reduction that we got coming out of this weekend. And that, I think, is a sign that an economic decoupling of the sort that we suddenly had is not in the interest of either country. And we can hope that that memory and the pain that was suffered in this short period of time by both countries, but most crucially by firms and by citizens, will stick in their minds as they sit down across the negotiating table, and they will say, we don't want to do that again. So let's make sure that whatever happens in this 90-day window, we accomplish enough so that we can present an agreement to both of our leaders that they're comfortable with and they can sign and we can move on.
Deborah, we are starting to see, a bit more of the Trump administration's trade strategy, basically maintain higher tariffs while incentivizing its, largest trading partners to come to the table with offers like China. Many have done so at the same time as well. And this may be important. CNN reporting, for example, that the Trump administration starting to send more serious people for trade negotiations. Scott Besson, Jameson Greer, prime examples over the weekend. How important are, I guess, these factors in getting these negotiations moving forward?
Well, I think personalities matter quite a bit in this Trump administration. They have a very small number of people driving trade, and most of them are not trade experts. The one exception to that is Greer, who is the USTR, the U.S. Trade Representative, or basically the trade minister. He does know what he's talking about. And so having him present is, I think, a good sign. And it's a sign that the talks are going in a direction that feels more familiar to all of the other partners, right? Because they know what kinds of things he's likely to put on the table. They have the same kind of language with each other. Whereas if you put, say, a Lutnick who really knows nothing about trade, or even Besant, who's not a trade expert by any stretch of the imagination, on the table, you don't really know what you're going to get at the outcome. And so I think it is helpful for counterparties, at least, to be able to see Jameson Greer sitting there saying, okay, at least I know what I'm dealing with here. And then we'll deal with the rest of the demands, the complaints, the complexity later. But this is a very different U.S. administration. Normally, when the U.S. goes to negotiate something like with China, there would have been an interagency process. There would have been a way in which all of the U.S. government, from the Agriculture Department to the State Department, Defense, et cetera, they would have come together. They would say, this is the kinds of things we are looking for. Here are the things we don't want you to do. This is the sort of, what we expect. Go negotiate, bring it back to us. We'll review that. But under this Trump administration, it's really being run by a handful of people who are doing everything, which means that their focus is not what it should be. And they're trying to slam together a whole bunch of deals in a very short amount of time. It's not a surprise that the documents that we've gotten already have been really inconsistent, that the demands on partners have been unclear, that the final deal, even when we get a sort of deal, as we did last week with the UK, or again over the weekend with China, is vague. When does it start? What do we do with products that are on the water? All kinds of technical, important details still to be discussed.
Okay, Deborah, thank you very much for that insight this morning. Deborah Elms, Head of Trade Policy at the Hinrich Foundation.